You're listening to Chart of the Week. I'm chatting to Bill Rook from Redmayne Bentley. Bill, we're going to start by looking at the FTSE 100, and your system seems to be finding good entry and exit points at the moment.
Yeah, it's about waiting for the fourth one this year, Giles. We look back at the history of it. It seems to be going quite well. The short one, we call it Putin's put. And, just before March, there, the first
Yeah.
one came in, and someone said, "How do you know that was going to happen?" I said, "Well, no, I didn't know it was going to rain when we built the ark. So we built it before it started raining, basically. So we don't know. This is basically the breadth for the put. The breadth has to go below its moving average, and the FTSE has to close inside its band, and the red arrow pops up, and then that would have been a 20% gain had you traded the right instrument first within 2 days of that one. And if you hadn't, you had another go 3 days later. And had you traded that with a turbo, very, very high risk, 37% possibly,
Wow.
or be about 3% on the FTSE. It depends on what appetite you have. Prior to that, you can see on the left-hand side, there's something like a 20% gain in there somewhere. So if you're trading the volatile instrument, so it wasn't too bad. That was basically 4 days down in a row after that last red arrow. Now, Giles, is interesting. We have low points being registered. We have a standby on the FTSE, a little circle there, suggesting that we've crossed the lower band. But the key here for the market to change upwards for me or the system, is the breadth. And the breadth in the blue window there is still turning lower below its moving average. Now, this isn't bad because it sets up a buy signal later on, but it's just what it is, really. We've got the other two indicators suggesting it's oversold too, so we're just waiting for the breadth to start turning up and the FTSE to reclaim the lower band at 65.83. And there's a high probability, I would think, of 200 or 300 points off the rise to the market if that occurs. Now, if that doesn't occur, then we just wait and see. But as we are now, so I reckon if it's going to do this, maybe it turns around maybe 6 to 8 days before it turns around, which might mean, say, a signal late March, early April, if it's going to happen, which I think is a high probability of it happening, given that we're oversold.
Okay, Bill. Very interesting stuff. Gold is the next one we're looking at.
Yeah, gold is dollar play, Giles. This is the whole thing here. We visited this chart before, but not on a. This is a weekly chart, 150 days, so it's 30-day moving average here, but with weekly, so it's 150-day moving average. Some people say, well, use a 100 or 200 day. This is working very, very well using a band of 20% above and below that, which is what we're seeing in the yellow window. Now, when it breaks down with that big arrow goes there, we see a fall down. Now, instantly up top there, where that vertical line goes, that's the gold against the dollar. So the dollar starts gaining strength there, and what happens there is that the dollar gains strength, I suppose, because the American economy starts picking up, or likelihood of interest rates go up in America, and that's a possibility. That was that was mooted last year. Then we have a fall in the gold price. And when it goes to oversold, this is very useful. It goes to the 20% band, and there you have a high probability of a bounce from the for gold. Now, every thing has different aspects, and this is just gold. And now it's rallied towards that 150-day moving average, or 30-day moving average, 30-week moving average, is on the weekly chart here, which is the green line. Now it's stayed above that, and this time around we're seeing a little chink in the pink window there as the dollar getting stronger. When that line goes down, dollar gets stronger, and that affects the gold price. It's the gold price. So the gold has reacted down. It's still holding above the 150 days, so it's not down and out yet, and it's still a runner, waiting for 1400 to confirm. For a lot of people, that's a significant number. I would have thought, looking at the chart there, tops this year 1500. Okay. I would say, looking at that chart, 1500, then it's going to react like we had on the left-hand side when it gets the 20% above that line. So that's the tops this year, and it might happen with geopolitical interruptions or slowdown of American growth. But those are the two main things that will drive gold higher. Either of those things happening. So the downside, if it doesn't hold the 125 level, the 125 level, then I think we're looking at 1250. We're looking at near 1,000. So it could go either way depending.
Okay, Bill.
So it's looking encouraging. Well, it's above the 150 day.
All right, Bill. How about Gulf Keystone?
Well, this is an example of a share which is not behaving, and really the money flow is the key. The money flow at the top there. When you in the yellow what's I've got here, yellow window. Now what have I got here? This is the Gulf Keystone. I think we've got Gulf Keystone taking off here. This is the one that sort of threw me here. This is where the money flow is good historically, and that's where you have the vertical lines thrown with the commodity channel index, which is useful for picking up above 100 and minus 100. You can see there where those vertical lines coming in. There are trading opportunities. So it's just sort of as a trading tool. This is quite useful in those three periods. Now, one period is extremely profitable; the others aren't so bad. Those are the only times this has been good. More recently, we've seen the share price break below its band, and everyone's thinking, well, it's oversold. And until we either have a money flow reversal or a share picking up through its lower band, and that's going to be nearer 125 coming through. More recent stuff here. So 125 is the key level for Gulf Keystone as it stands for it to achieve a reversal status of which will give it some degree of success. But at the moment, it's not looking good. Reserves are not too healthy. Cash flow is not too good, although it's coming to the main market, which is good. So troubled at the moment, but having a 125 level will be useful to have on that one.
Okay, Bill. And finally, copper.
Yeah, copper. Now, so well, this is I feel like a paradox. This one here, in the sense that this is a leveraged copper. Leveraged copper is some people think I want to go leveraged on certain items. Now, the problem with leveraging is the cost of leveraging. The contract has to be renewed, and when you get it right, it's very good because it doesn't eat into the costs of the contract too much. But when it doesn't, it costs a bit more. So what happens here is can I use a weekly chart on a particularly spicy, maybe expensive contract? It's expensive in terms of profitability of trade because of the reloading of the contract. So the first arrow on a weekly chart is indicative of a buy, which is the blue arrow. Why is that triggered? Well, it's a recent low crawling inside the lower band. That's the rule. Now, very, very far left-hand side, you can see how it doesn't work, how that fails. And this is why I think with this particular contract, you want to see, with this particular trading system, you want to see follow-through, a day or so follow-through. So it does follow through from the lows here. It's not trying to get in right at the bottom. We just want to ascertain the earliest possibility of a trend change. Now, I don't know if looking at these, the money flow might have helped that trade at the top there. The CCI kicked in a bit late. So the money flow above 50 is useful for ascertaining whether the trend is kicking in your direction. So these trades here, I reckon, are a few of them are quite good. Now, this is a difficult one because we haven't got a lot of trend other than sideways and possibly down. Now, as it stands at the moment, it's falling, it's challenging the lower band. So what I would like, in order to get a blue line on there, we want to see it go down further and then pick up higher from there. So it has to actually reverse. That's what I'd like to see, and then a bit of follow through. It is hitting low points at the moment, and it's what I reckon sit on hands until that turns round, and wait and see. The main reason by copper's fall is China, and that is the problem with that at the moment. China's sort of giving off signals that things aren't so rosy as they should be or expected to be, and hence this is being dragged down. But it could be a very interesting trade later on when it starts following through.
Bill, thank you very much for that. That is all for this week. We'll chat again next week.
Thanks, Charles.